I mean, I want income too, but I don't want to lose my principal. But you can't get highest income and high growth at the same time. Sometimes people look at that and they're like, I don't know about that. I just don't think they wanted to go through that work. So anyways. Hey, the Guaranteed Retirement Guy here. I appreciate you tuning in. Today we're going to be talking about one of my clients who is looking for level income or increasing income or just growth, and he wasn't sure. And so let's explore this together because I want to kind of show you what we came up with. So he lives in Nashville, about 2 hours north of Nashville, I believe. And he wants a growth product and he wants income. He wants everything. His wife just wants income. She wants highest income possible, but you can't get highest income and high growth at the same time. And so we were like, well, what do you truly want? And of course the wife was like, well, I want growth. I want income. Okay. And the husband's like, no, I want income too, but I don't want to lose my principal. And so, which I totally get. And so I told him, well, just use the portion that you want for income and leave the rest alone. Okay. You can't get both. If you want high income, you're not going to be able to preserve your principal. You can't just, get this huge payout and then just all of a sudden have all that money just stay intact. That's just not how it works, okay? Unless you want to buy a MYGA. So we were looking at a MYGA, and I said, you could get this MYGA that pays 5.5% and take it out for 10 years, and that's great too. If you want to put $1 million in, you get $55,000 a year. At the end of 10 years, then you still got your principal, and you can put it in something else. Now, if rates are at 2%, that's going to be a problem. And if you were thinking, hey, it'd be nice to have lifetime income that's locked in, I don't have to worry about, that would be a problem too. So you can certainly turn it into a lifetime income product later on, but I just don't think they wanted to go through that work. So anyways, we were looking at different options, and I'm just going to refer to my notes here because there's quite a few of them. All right, so Allianz. Allianz was the best one for increasing income and a higher death benefit, okay? It was just more expensive. It was like $500,000, okay, for the same income that a $380,000 annuity would do with Prudential, okay? Same exact income, all right? Then Lincoln, best growth, but the income was not guaranteed. So he could throw it into Lincoln Financial, get 60% of the S&P 500, get a ton of growth, get a ton of market protection, and he could still take income out. He just has to realize it is not guaranteed, because if the S&P doesn't do what it's supposed to do, then he may not be able to take out as much as he'd like, but at least he can take out income, he can preserve his principal, and he can have some growth as well. So it kind of gives him the best of both. Then it was Nationwide MYGA, and they were actually looking specifically at an A+ rated company. And so for them, Nationwide was the best option for that. Now, I'll just tell you, you don't have to get A+ for MYGAs. I mean, the higher the rating is always better, right? But when you're looking at like 5-year contracts with a company that's like 50 or 60 years old, it doesn't matter as much. And especially if you're under the guarantee association offered by your state, or the guarantee amount, like $250, then that's pretty good too. Okay, so you've got a number of ways to be protected, and you can get a little bit higher of a rate. But no, that's fine. I'll sell you an A+ all day long. I mean, I love A+. If you can get it, great. You just have to realize that a lot of them, especially with the MYGAs, will not pay as much as like an A- or a B++. So it just depends on the company. We can talk about that if that's what you're looking for. But yeah, so there's a lot of things to think about. I mean, if you want increasing income, there's a good index option with Allianz. You just have to realize it's all just depends on the index, and the initial amount, the initial income is lower. Otherwise, you have to put more premium in. And in their case, it was $500,000 versus $380,000. So big difference there as far as what they had to put in. So if you don't want to do that, you have to be happy with lower income. So it's the same with SPIA contracts. If you buy a SPIA with a 2% COLA, it's the same thing. It's going to start you at a much lower amount, and it's going to take like 7 to 8 years to actually get to what your initial amount would have been in the beginning. So, sometimes people look at that and they're like, I don't know about that. So you can always buy one big contract, set up a base for yourself, a base salary, if you will, from your pension annuity, and then add more annuities. Okay, stack your income and activate those later on. That way you can get higher income later and you can beat inflation. So anyways, all right, I'm gonna get up. So I'm walking through the forest. Behind me is Christmas Tree Valley, beautiful valley. And it is green still, you see the ground is still green. Although Things are starting to change here quickly because it was just starting to cool down, which means fall colors. So it's going to be beautiful. But it is awesome being out here and sharing these stories with you. I hope they are helpful. If they are, make sure you like, subscribe, share. If you want to buy an annuity, go to my website first, johnstevenson.com, and you will be able to see all the payouts, okay? I hold nothing back. And then when you're ready, book a call. There's a link on my website as well. Otherwise, you can book a call right below this video. You're welcome to do that if you like. But yeah, love to help you. So I hope you enjoy these videos as much as I enjoy making them. And hopefully you're finding value, and hopefully you're getting some of your questions answered as well. So if you do have more questions, just comment below. I'd be happy to answer them. Otherwise, we'll see you next time. Hey, I really appreciate you watching the video today. If any of it makes sense to you, or if you found value, or if you even got a question about anything, I hope that you'll go to the comments section and ask it. There's no stupid question, and I'm looking forward to hearing from you.